Greetings. Welcome to my market recap, weekend market recap 20th August 2022. I'm a bit late to start today's session. My audio capture system, audio input capture was not working on the streaming software, so I had to reboot my computer. I apologize for that. I retired from IT and I'm swing trading stocks now in USA as well as global markets using the Q systems and techniques. You may contact me using my email ID info@superiorprofit.co. I regularly share live stock and market analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I mostly use the Q systems running on Metastock. All the system components run on Metastock. Sometimes for technical analysis, I also use TradeStation. The technical analysis component runs on TradeStation as well. These are the different components. That was the last slide. Let's start with the live system, starting with global markets analysis. First, a look at the Australian index, all ordinaries. In the last market recap, I mentioned that all ordinaries was bullish. However, it was extended and I was not going to take any new long trade. I am continuing with the same view. It is still bullish, still above upper boundary, crossed upper boundary somewhere here. Weekly backdrop color is continuing to be bullish, shape is bullish, so it is bullish but it is extended. Once again, looking back, our previous entry would have been on one of these 3 days when we had bullish flow after a bullish headwind. If you did that, you may continue to hold partial position after booking partial profit. Bullish extended. What about Japan's Topix index? Topix once again shows the accuracy of Q analysis. In the last market recap, the video is on YouTube channel, I explicitly mentioned that only one market I was willing to buy stocks among global markets, and that was Japanese market, because it broke out of the trend line resistance that was there. There was a trend line resistance here at that time on Friday. It had broke above that. Looking at that, I mentioned that I would be bullish on topics, and that was very useful in my jargon. Useful is profitable. It very beautifully went up for the week. This had a breakout setup. Interestingly, on Friday in the USA, market was very weak, but you could find some breakout long candidates. If I have time, I may review some of the charts I shared on Twitter. Breakout setups in Q systems are also very reliable when the stock is fundamentally strong. In any case, this was a breakout setup in topics index that I shared in last market recap, and it turned out to be very profitable. Bullish, and now it is extended. It is above upper boundary, so I will not buy, but it is bullish. Same as in Australian market now, bullish extended. Next, China's 300, CSI 300 index. CSI 300 is trying to go up after hitting the trend line support, and when it came near the trend line support and it had a trend line resistance also, when it broke out of the trend line resistance, I mentioned I would not buy in CSI 300 because the weekly was bearish, and the weekly color and shape also this week are continuing to be bearish. So my view once again was effective, that I could buy individual stocks when CSI 300 had a breakout from trendline resistance, but I would not buy CSI 300 itself. That turned out to be useful because CSI 300 itself did not go up. Now it has come back to the trendline support in daily, multiple of them. If it can go up, now I will be happy to buy CSI 300 as well as the constituent stocks that are fundamentally strong. What is the difference from the previous time when I shared the breakout idea? The first time it broke out, it created the first leg of the double bottom, and now it is creating the second leg, not exactly bottom, but it is a trend line support. And if it goes up now, it will create higher high, higher low. That will allow me to look for buy setups. Will CSI 300 give a proper buy setup? I doubt it, because the weekly is still remaining magenta. Therefore, I could look for constituent stocks to buy. I also mentioned, if you noticed, I also mentioned that I would not mind buying CSI 300 if it goes up from trendline support next week. However, I am also saying that the weekly may not allow me to have a proper Q trade setup. Are they conflicting? Not really. When I am talking about Q setup, those are in the weekly daily time frame. One of the established setups like box, bounce, headwind, flow, etc. I would not be able to use those setups to take a long trade. However, we also have the precise entry techniques using real-time charts. I will be happy to use that to take a long trade in CSI 300 if it goes up. So those two statements, though they are conflicting when you first hear them, when you drill down and you apply different techniques, weekly daily template for swing trading and intraday templates for precise entry, you understand that both are possible. And something opposite of what I just described, I used in the USA market. I tweeted right at the very top that I shorted the market ETFs. Again, if I have time, I look at the tweet and explain how, though there was no weekly daily trade setup, no proper swing trade setup, I could use the precise entry templates to take shorts on USA market right at the very top. And CSI 300, I'm describing the opposite situation. The more you study these systems techniques, you will see that whatever be the market, country, instrument, if you are observant enough, you are able to buy at a low point, like I'm describing in CSI 300, and short at a high point, like I did and shared in the USA market. What is the advantage of buying at precise low point, shorting at precise high point? That is a big advantage, that is the risk is very narrow. Coming back to CSI 300, sometimes I deviate a little bit to discuss the technique. The technique is very useful to understand, so we can apply in any market. Coming back to CSI 300 though, what is the direction? It's sideways. Where is it in the sideways range? At the lower edge. What is my preferred trading direction at the lower edge of a range? Bullish, if it bounces up from the trend line supports. When I will take short in China market, if it can break below all these three trend line supports, that will give a breakdown or breakout short setup. Sideways market, currently no trade. If it breaks down, my preferred direction will be short. If it bounces up, preferred direction will be long. What about FTSE index, UK market. For UK market, I am seeing this series of bearish indecision at the top. Yes, market is going up gradually. We can see that from the weekly also. However, I remember right from here, from this, meaning this day onward, precisely this day onward, when I had my weekly market recap at that time, I mentioned that I would not buy into the UK market, and I am continuing with that view. Yes, market has gone up, but that's okay. I did not take any trade. I would not have taken any trade, and I would continue to apply the same logic in any market, any instrument going forward as well. What does it mean? That means I don't have to capture every possible market move, and I do see some traders trying to run scans, trying to use many systems components together, trying to capture every market move. Few comments on that. Firstly, it will never be possible to capture every market move that on hindsight looks profitable. Secondly, it's too much of work. There are ready-made trade setups that are unambiguous in Q systems. Just following them gives plenty of trade setups. There is no need to add risk trying to capture every market move. Why I say add risk? Because every market move cannot be qualified or quantified in proper trade setups. In Q, we have done that. I have done that for all market conditions, but that doesn't mean I'm able to capture every market move, and I would not try that as well. So this is an example of a market move that I would not profit from, and I'm okay for that. What is the market nature for UK market? Sideways, very wide range, but it is also sideways. Where is it in the sideways range? At the upper edge. That is opposite to the China market. What is my preferred trading direction when an instrument is at the upper edge of a sideways range? Short if it goes down next week. When will I buy again? If it can break out of the trend line resistances in both weekly and daily. This is opposite to the analysis I did for the China market. So two markets, bullish and extended, those were Australia, Japan, two markets sideways and near either upper or lower edge, that is UK and China, and lastly India's Nifty 50. In the last market roundup, I mentioned very clearly that it was bullish, no doubt about that. I think somewhere here. It was very bullish, there was absolutely no doubt. At the same time, in my mind, because I have the Q systems, I could see the trend line resistance in weekly. In my mind, it was not the right time to buy. And that analysis once again turned out to be useful. In my jargon, useful is profitable. Market tried to go up and sharply reversed on Friday. This trend line supports and resistances work beautifully. I use the resistances to take shorts or not to take longs anymore. I use the supports to take longs, not to take short anymore. Unless the lines are broken, of course, then I will take trade in the breakout direction. What is the nature of India market now? It is in an uptrend, no doubt about that. Very strong uptrend, in fact. One day on Friday, we had a sharp down move with a bear release signal and another bearish indicator, reversal day, very high volume, big move up 3, big move down 3, bearish, big move down 3, red color, bearish momentum. Yes, all those came on Friday, but it is still one day. The trend is still up, no doubt about that. Will I buy now? No. When will I buy again? If price can come to this trend line support and bounces up, I'll be happy to buy again. Will I short now? No, because the trend line support is too close to short. So neither will I take long nor will I take short in India's Nifty 50. The trend is still bullish, but I will not take any trade right now. Therefore, three of the five global markets are actually in an uptrend. That's very bullish. Two are sideways. None of them are in a downtrend. So we cannot say that the market is weak. Yes, Friday global markets sold off, many markets including USA, but that doesn't mean market is bearish. What about the global index? Custom index is market breadth. This global index ex USA broke out of the trend line resistance, that is bullish. However, closed with indecisive shape candle and very importantly with a bearish indecision at the top. So I will not like to buy now. In the daily, it broke down below the trend line support with bear release signal, bearish shape candle. I will not like to buy now. Will I short? No, there is no short trade setup. Unless you want to take breakdown short trade setup, that is possible. In fact, if you find stocks that are at a very high price level mirroring this global index, this is a custom index, we cannot trade this, but if we find this kind of pattern, a stock that is at a very high level, it was stretched or overbought for many days, just now the overbought condition went away, came down with bearish momentum with a reversal candle. Interestingly, the global index also showed a bearish reversal candle on Friday. If we have this kind of pattern in daily and in weekly we find a trend line resistance, then I am happy to look for shorting that instrument. If not using the daily interval, certainly using the intraday precision entry chart template. Certainly. So global index, if I could trade it, I will be happy to look for short trade on Monday using precise entry template. Once again, let me deviate a bit about the technique of Q. In Q, I distinguish between market direction and preferred trading direction. Global index clearly is bullish. It is in an uptrend, no doubt about it. But my preferred trading direction when I look at weekly daily is actually bearish. And because of this distinction, I am able to be, I think so, more accurate than most other traders most of the time. At turning points, I qualified that at turning points. At trend following points also, those are also kind of turning points. But certainly at reversal points, I proved that in USA market once again with a tweet before knowing the results. I look at it and explain how I decided to short USA market right at the very top. To my knowledge, nobody was talking about shorting USA market on that day. And the same view I am holding for global market as a whole. Okay, what about USA market now? Let's look at the USA market starting with the market ETFs. But before that, why don't I look at a tweet that I shared a few days ago. August 16. August 16 was Tuesday, early in the week. And on that day, the market ETFs recovered again. Initially, they were down, they recovered again. That happened for previous day also, at least the previous day, maybe a couple of days. And when I shared it, let's see the time, 1:30 p.m. significantly before, quite a while before market close, and I mentioned as of now the market ETFs recovered again today. However, there are Q signals that this is not a bullish move into which you may want to buy. And this is the uniqueness of Q signals taken together from different systems, looking at the market from different angles. I or you could decide that though market recovered for successive days, normally it would be taken as a bullish move. But Q had enough signals to alert us, and it did me, that that was not the time to buy. One could try to short. And I looked for Q short setups, but because the market was recovering on successive days, it was not easy to find the kind of shorts I like to take where market or at least industry fundamental technicals were aligned together. I couldn't. Then what option was I left with? I could short the market ETFs. Could I short using a proper weekly daily Q trade setup? No. There was no swing trade setup, but I could short using intraday template. And options could be used. Why I preferred options in this case? To minimize my risk. I actually used short call vertical on that day, on Tuesday, and between Tuesday and Friday, using intraday charts, I several times shorted different market ETFs, either using verticals or using short call. I didn't use long put. I used either short call naked options or I used verticals. Verticals are low risk trades. I came out of all those trades from Tuesday to Friday with a nice profit, all of them. Now, how could I do that? Now let's look back on the market ETFs and look at the chart, how it was on August 16. And by the way, on August 16, when I shorted, I mentioned using market ETFs, I used QQQ because that was relatively the weakest on that day. Now let's look at the market ETFs. Let's go to Trade Station, use Q Elite so that my Q Elite program doesn't feel bad. That's why I am not using Elite, only using Global. Start with QQQ because that was the instrument I shorted. And I will try to highlight what were the reasons that enabled me to take that decision. When did I short? On this day, Tuesday. That was the day market made the swing high. How accurate was it? One could not be more accurate than that to short the market at the very high. I shorted intraday well before market close using vertical bearish position, and I closed the trade by Friday. Now, if you look back now, you see there was a bearish indecision and then a bearish headwind. And very importantly, I showed this trendline resistance in weekly chart in several global markets also. QQQ had that trendline resistance already. So I was expecting very much for price to come back and close below or at the trendline resistance. It was already up for many weeks and it was time to take a breather, at least to come back below the trendline resistance. I had the bearish headwind also. Another thing that allowed me to short one of the market ETFs, QQQ in this case, because relatively it was the weakest on that day, I will share later when I look at market breadth analysis. So QQQ I shorted beautifully at the top. What is my view now? In weekly it is reversing from trendline resistance. That tells me that I should be cautious about buying. However, market has already dropped for 4 days. And that is one thing that I keep on noticing. When I shorted, nobody was willing to short. Good for me. Now probably everybody is bearish. Am I bullish? No. However, I am not as bearish as others. I was bearish at the top. Am I bullish? Again, no. But if market goes up on Monday, I'll be happy to start buying again. with the anticipation that the up move will break out of the weekly trendline resistance. Remember, we looked at the global markets, none of them are bearish. Some of them are moving sideways, majority of them are in an uptrend. Yes, they pull back, like India market pulled back on Friday, but that's only one day. USA market QQQ pulled back for 4 days. Will it continue to go down? Possible. That's why I did not buy, or at least I didn't share anything about buying on Friday. I'll be happy to buy, or I'll be happy to share my candidates again publicly on Monday if market goes up. Another thing I observed, I'll share later if I don't forget, and why I closed my shorts on Friday. Why did I close it? It is looking bearish, isn't it? QQQ and other market. Why did I close? I'll share that. Of course, one reason was I had good profit. Those were options trades. Intentionally, in this case, let me explain my trades. I was shorting at the very top. I had high degree of confidence as usual. My accuracy rate is quite high at turning points and at trend following points also. So in any case, I was shorting and I wanted to maximize profit in this case. Verticals expand in profit slowly if the expiry is far away. So in this case, when I shorted the QQQ, I took only I think about 10 days to expiry. So already it crossed 4 days, then the weekend was coming. So I was not going to risk my profit going into the new week. In case price moved up, my profit will erode very quickly because my expiry was nearby. So that is of course one reason I booked profit, and I had a good profit also. Okay, so QQQ, do I have a short setup? No. Do I have a long setup? Certainly no. What is my preferred trading direction? Actually none. None. If it goes down next week, am I going to short QQQ? No. However bearish it may look, my stop will be far away. If you notice my trades, I never like to short, not using daily chart at least, when the stop is so far away. So if market goes down, I'm not going to short QQQ. There may be other stocks to short, but not QQQ. Am I going to buy? Actually, if it goes up, I like to buy, seeing that price is regaining the white direction line in anticipation once again that the weekly trend line resistance will break out. Will I buy QQQ? No. There are many fundamentally strong stocks waiting to buy. For me and you to buy, I'll buy one of those, not QQQ. What about SPY? Now see, when I shorted QQQ, I was not just looking at QQQ, I was looking at the market from many angles, and I knew SPY also had a trendline resistance. Once again, it worked beautifully. It reversed from the trendline resistance. Why didn't I short QQQ? Because on the day I shorted, sorry, why didn't I short SPY? Though it had a trendline resistance also in weekly like QQQ, I shorted QQQ, not SPY, because on that day using fine tune chart, QQQ was relatively weaker. And if I'm using intraday chart to short a market ETF, I like to short the one that is the weakest on the intraday fine tune chart. Am I going to buy SPY now? No, there is no buy setup. Not now, but if it goes up next week, will I buy SPY? No, because here I have trendline resistance in weekly, daily, both. QQQ did not have the trendline resistance in daily, so I will be happier to buy QQQ than SPY if market goes up next week. And as I progress in my analysis, I'm spending more time on the market today for good reason, as you can understand. You will see things are falling together from multiple angles. Here I am making a comment. If the market goes up, I will choose to buy QQQ looking at the market as of today, not SPY, because of the trend line resistance in daily in SPY. What about DIA? See again why I was able to short confidently at the top. Dia also had a trendline resistance in weekly. Similar chart to QQQ. If the market goes up next week, I'll be happy to buy Dia and QQQ, not SPY, because Dia and QQQ do not have a trendline resistance in daily. If it goes up in daily, I will anticipate that the weekly trendline resistance will be broken. In fact, Dia is looking even better because it has to go up only a little bit to break the weekly trendline resistance. And if you look at the relative performance this week, actually more than this week, about last 10 days or so, Dia is the stronger ETF, stronger than SPY. So that will be another reason to buy Dia or industrial stocks. And lastly, IWM. Now remember when IWM was here, right on this day, I think this week, this bar, I had the market recap and I mentioned that was the only market ETF that did not have any trendline resistance above. We saw Dia, SPY, QQQ had the trendline resistance. IWM had it broken earlier. So I was bullish and IWM went up more than others. Now it came down, but the weekly backdrop color is continuing to be bullish. Daily has already dropped for 4 days. Am I going to short now even if IWM goes down next week? No, not IWM because stop will be far away. If it goes up, we'll be happy to buy? Yes, because the weekly is still remaining bullish in color. If I have a cyan candle in daily, that will actually give a flow trend following long setup. I'll be happy to take that. If not IWM, I'll be happy to buy small cap stocks. What does it show? That if the market goes down next week, I am not able to short because stop is far away. If it goes up, I am happy to buy because it will create a swing low and go up. And I have preference in some ETFs than others. IWM first because weekly is still bullish. There is no trendline resistance in weekly. First preference IWM, small cap stocks. Second preference Dia, industrials. Third is QQQ actually, large cap tech stocks. Last is SPY. Interesting, isn't it? And you will see as I progress how things are falling together. Let's look at, I don't have any fixed format. Looking at the market every week, depending on the market, I look at it differently. Let's look at mega cap custom index first. If you noticed on Friday, mega caps were not strong. And for last 4 days, mega caps are also coming down. However, notice the mega cap custom index chart as of today. Right at trend line support, multiple of them. Am I going to short now? No. It's right at trend line support and there is an ascending yellow direction line coming up, another trend line support after that. I will not be able to short mega caps anytime soon. What about price going up? I'll be happy to buy because that will be kind of bounce setup. Not exactly bounce setup, not heavy drop prior to bounce, but it will find support at multiple trend lines and I'll be happy to start to buy. And I came to this chart first instead of looking at market the total view is to link it with what I mentioned about my preference between market ETFs. QQQ is most influenced by the mega caps than the other market ETFs. And you see how things are coming together. I mentioned I will prefer to buy QQQ than SPY from a different angle when looking at the market ETFs charts, and now looking at the mega cap also, I'm saying I'm more inclined to buy than short. That will actually help QQQ the most. So QQQ is something I will not mind buying if market goes up, if mega caps go up next week. Interesting, isn't it? Others may be bearish now and I'm talking more about possible bullish trades. Again, I did not share any bullish ticker as of Friday's close. I want to mention that clearly, and there is a reason for that. As we go along, I'll explain. I am getting ready to buy and share trades publicly on the long side. Not yet ready to share publicly on long side yet. Okay, so mega caps. Now let's look at market breadth total view, a very powerful single chart looking at market internals, and that will tell you one more reason why I was willing to short right at the very top on this day. What came the day before that? I shorted on Tuesday, this day. What came the day before that on the market breadth total view? It displayed an up arrow. What is that up arrow? That is, thanks to Mr. Ian Woodward, may him rest in peace, thanks to him, the signals, that is Bango. Bango is a name he used. What is Bango? Buy everything, even those of not value. That is opposite to Bingo, that comes with a magenta arrow, down arrow. Bingo is sell everything, even those of value. That's how I phrase it. Bingo, sell everything, even those of value. Bango, buy everything, even those of not value. If Bango comes at a swing high, I look to short. If Bingo comes after a market drop, I look to buy. So that is another reason, because the Bango came at a swing high, and usually these unique signals come at where they are required to come. You see, the Bango came at swing high. That's where we got an alert. And very next day, I was happy to short the market ETFs based on other key signals also, like trendline resistance, intraday chart, etc. That was then. What was other reason? I mentioned that in the previous market recap already, that the yellow line percentage of stocks above 50 MA was already overbought, not sustainable. The dark sand line 3-month new high low was already at overbought level, not sustainable usually. So I was having confluence of signals from technical breadth internals, market internals, from trendline resistance in market ETFs, and the way the stocks were acting. So that was when I shorted. What about my Friday's view from this market breadth total view? The 3-month new high low is not overbought anymore. Yellow line very close to overbought condition, but prices still come down for 4 days. Even if it goes down next week, I'm not able to short, stop will be far away. If it goes up, I'll be happy to buy, because it will go up from a swing low after creating higher high, higher low. That will give me a trend following long setup. That's how I'm reading the total view now. Interestingly, if you look at growth versus value, in the last market recap itself, I mentioned that it was flattening out. Growth was not in favor anymore. That's what I mentioned in the last market recap. That is continuing to be my view based on data. It's not my view. That's what the data is showing. Growth is flattening out. There is no favor to growth stocks now. Small cap versus large cap. Last week, small cap was in favor for last couple of weeks. IWM was the strongest, not anymore. Small cap is not in favor now. Small cap is not in favor, so large cap in favor. So that may also give more preference to buying DIA or constituent stocks, or QQQ or its constituent stocks. That will be avoiding small caps. As we are progressing, we are refining our preferences. So after this step, I am saying I would like to buy industrials or QQQ, large cap tech stocks, if market goes up next week. That's the view as of today. Between Nasdaq and NYSE, let's now look at market internals into a bit more detail. NYSE, it hit the overbought level for percentage of stocks of 50 MA, came down, hit the 3-month new high low, overbought level, came down. 3-month new high low in in Nasdaq also hit overbought level, came down above 50 MA, came very close to overbought level in Nasdaq and came down. Now it is a bit too late to short any of them. I did short at the very top. That was good for me. Now it is a bit too late to short. So we look at the market from market ETFs, look at the market using total view or the two composites. It's a bit too late to short. Can individual stocks be shorted? Yes, but when the markets are from different angles, already a bit too late to short, I tend to be cautious. And that's the benefit I have. I'm able to short ahead of others. I don't have to short when it is already a bit too late to short. Now again, individual stocks may give short trades. If I have time, will I look at them? Let's see. Before looking at stocks, let me look at the market from Q edge, sector, industry, stock, advanced decline, breadth. Very useful chart. 1 month to 1 day, sector, industry, stock, advanced decline. 1 month, 10 days, may be considered longer term, still bullish. Medium term, 5 days, bearish. The whole week is bearish overall. And 1 day, 2 day periods are also bearish. Long term is still bullish. If I have a bullish Monday now, then I'll have a swing low from the advanced decline breadth perspective also, and I'll be happy to buy. On the other hand, if market goes down next week, it will already be a bit late to short. From this advanced decline chart also we can see that the overall view is showing it will be a bit too late to short, but if it recovers, that will be the perfect time to buy because longer term is bullish. We had a dip in the market, and then if it goes up again next week, in real time we can find that out on Monday and we'll be happy to buy. Is there any signal to buy on Friday? No. That's why I did not share any buy candidate on Friday. Friday's market was very bearish. 100% of sectors, 93% of industries, 88% of stocks were bearish. On that day, I do not like to publicly share long ideas. Now, let's look at the bucket analysis. Not long ago, in fact, I captured the snapshot. I have kept it somewhere. During real time, it means the percentage of stocks in the uppermost bucket, that is above Bollinger Band for S&P 1500 stocks, almost hit the 30% level in real time, not at end of day. These charts are updated real time. So I was observing that, and once it hit that around 30% level, it never went up anymore. Once again, that concept proved very useful, that is profitable, that if it hits the extended level in bucket analysis, be cautious to buy. That was the perfect time to short. Now it is already down a lot, not overbought at all. Is it bullish or bearish? It is still bullish. Friday was bearish. However, 70% of stocks are still above the mid Bollinger Band. That's a bullish market. Now if market goes up, I'll be happy to buy the dip. Will I buy on Friday? No. Friday was very bearish. Okay, I could have bought some, but that's because of my risk tolerance and I selected stocks, very specific stocks to buy. I know how to manage my risk. I have some profit in the bank. With all those things in mind, I had some long positions taken on Friday, but I wouldn't share them publicly because the day itself was bearish, and it was bearish from technical breadth also. That was another reason I didn't want to share the tickers. This is technical breadth on Friday using Q Finder. very bearish. 93% of all signals, 94% of strength signals, 96% of continuation, and even reversal signals, 78%. There was nowhere to go and look for bullish trades from the overall view. You can see the length of the red bars compared to the green bars. Some of the green bars are non-existent. That was a very bearish day. How was the week? We saw advanced decline breadth for secondary stocks were bearish for the week, and for finder technical breadth also the week was bearish across all the categories. So the technical breadth and the sector industry organization breadth were so bearish, I didn't want to share bullish ideas on Friday. Though I am very happy to start sharing them next week if they go up, if the market goes up. Now that is how I analyze the market. I shorted the top, I booked profit, now I'm waiting to buy. Having said that, let's look at some stocks I may like to buy. Again, I shared the tweet without the ticker symbols. Let's look at those charts if I remember the stocks. But without the stocks, let's focus on the technique. I shared this on Friday, this tweet. I booked a profit today in bearish trades that I tweeted on 16th August. That was the short trade on QQQ. On Friday, I mentioned many traders are now turning bearish, but I actually looked for bullish setups. Here are a few. I didn't share the tickers, but let's look at the stock charts. Whatever be the market, leaving that aside, we have to conclude. Actually, we don't leave aside the market. On a market day that was very bearish, look at this stock. Confidently broke out of the trendline resistance, decisively broke out of the channel resistance with a bullish flow, with a very bullish shape candle. This stock has to be bullish. Was it a stock like gold mining, for example, or gold ETF or something that goes opposite to the market? No. It was an ordinary stock, not a commodity related stock. So this stock has to be bullish. If next week market goes up, this may go up even more. That is what I'm thinking. It may go down also, but if it goes down, then it will come back below the trendline resistance and I can cut my loss quickly. This stock is looking very sharp, very strong as of Friday, because Friday was a very bearish day in the USA market. That's how I'm reading it. It also bounced up from the channel support, and notice something interesting. It is above the white direction line, above the yellow direction line. Sharply broke below the yellow direction line, regained instantly, stopping out weak hands. Now very bullishly broke out on Friday. This was one stock I found on Friday. I'll share shortly how I found them. Next chart. Again, this is as of Friday. On a very bearish day, this stock found support near trend line support, yellow direction line, channel support, white direction line is already below price, had a bullish flow, closed very bullishly, in fact gave a possible flow trend following long setup, price went up with high volume. This happened on a very bearish day. So this stock must be strong. Again, not a commodity related stock, an usual stock. By the way, these two and the third chart I'm sharing, all of these are also fundamentally strong. You can check that out. You could check that out as I did using QVital. This is the third stock. Yes, it is in a downtrend. It was in a downtrend, but now as of Friday's close, the downtrend is broken because it is breaking the trend line resistance, two of them. These resistances are very effective, and therefore when the resistances are broken, that is also meaningful. So it broke out of the trend line resistance with very high volume on a bearish day. Notice all of these three are breakout long setups. I'll not go into the tickers again because I don't want to share bearish trade tickers. Sorry, not bearish bullish. I don't want to share bullish stock trades on a very bearish day, not for general public, but I will share how I found the stocks. I knew the market was bearish on Friday. I also knew it was too late to short. If so, I was happy to look for possible buy candidates. How to do that? Look for stocks that are not falling down on a bearish day. Instead of falling down, I looked for stocks that were breaking out to the upside. So I came to QFinder, go to the bullish signals, and you see not many bullish signals were there, not setups at least. These are the setups: bounce, box, headwind, pullback. Not many, right? But I noticed there were number of breakouts, 6 precisely. So I took these 6 stocks to QVital to do their fundamental analysis, found stocks that were bullish either in terms of valuation or earnings growth, hopefully both, but if not so, at least undervalued or high earnings growth or some other favorable fundamental characteristics, and then I looked at their technical charts. That is how I found these 3 stocks. I didn't mention the ticker, but you may carry out this exercise as a technique on a bearish day after market has already fallen for a few days. Remember that. If Friday was the first bearish day, I was not going to look for possible long setups. But market has already fallen for 3-4 days. Then I am happy to look for stocks that are breaking to the upside on a very bearish market day. That is how I found the stocks. You may find them from QFinder yourself. I'll not disclose them, close them today. But if the market goes up next week, I'll be happy to share them as well as other buy candidates. I'm nearing 1 hour point. Discussed more about the market today, how and why I could short at the top, why I am not talking about shorting or buying now. Actually, I'm happy to buy next week instead of shorting next week. That is because of my use of the Q systems, which I think are unambiguous because they are color coded. That's all for today's session. Thanks a lot for joining. I look forward to seeing you in my next session. That will be next weekend. Have a great weekend. And as these live examples on Twitter and live webinar show, there is no reason not to do that. I'm convinced about that. No reason not to do that. Trade profitably. Thank you. Hello, hello, hello. Okay, finish.